It's 3 o'clock.
For everybody who's joining, we're going to start in 2 to 3 minutes. We'll just give a couple of minutes for everybody to join. So thanks for your patience. Okay, I think we can start. Got a decent number of people who've started joining us already, and I'm pretty sure there'll be more who'll join us along the way. So for those who joined, welcome. Welcome to the second webinar in our series of Commodity in Focus. Some of you may have attended the last one. If not, we've already done a webinar on the resins market, similar to a lot of other commodities this year. Resins have also seen a lot of inflation. So we covered basically factors that have impacted the price inflation for resins, which feed into your packaging spend, and the recording and the content of the webinar is already available on our website. Today, we moved a little away from the petrochemical side. We moved on to the agriculture side of things. And today we're going to be talking about two very important commodities, corn and palm oil. For a buyer, whether in the food and beverage industry or the consumer care, personal healthcare, or the life science industry, and for somebody even in the manufacturing side of things, these are commodities that kind of become staple in a lot of your spending. And you, same as a lot of other category managers, I have also probably been facing a lot of issues today with the inflation that you're seeing in both of these commodities, especially palm oil, which is now seeing record highs in the market. You're probably questioning, well, where are prices heading? What are some of the factors that are impacting these commodities? And what can I do as a category manager? Today's webinar is focused on that, where we're going to be talking about the key cost drivers for the inflation that we're seeing in both of these commodities, where we expect prices to be in the near term as well as the long term, and what are some of the risks and opportunities in both of these markets. Today, I'm going to join today by two of my very knowledgeable colleagues, Abhishek and Rishabh, who are both specialists in our commodity intelligence team. This team is comprised of multiple analysts who are basically working day in and day out on multiple commodities. Abhishek has a lot of experience specifically in the grains market, is going to cover the corn side of the presentation today. And Rishabh has a very good experience in the veg oils market and is going to be talking about palm oil. And my name is Sid. I'll basically be your host for this webinar. Today's agenda, we're going to be covering first corn. We're going to be talking about, like I said, the multiple cost drivers. We first focus on basically how the prices have fared recently. We're then going to talk about the supply and demand factors impacting prices, as well as the inventory levels as well, and then focus on where prices might be heading in the future. Over here, we've used a multi-linear regression modeling technique to basically forecast corn prices for the coming 12 months. After corn, we're going to move on to palm oil, where Rishabh will jump in and give his views on the various factors, including the labor shortages in Malaysia, biodiesel demand, or demand from key consumer markets in palm oil, and how that has impacted prices, and where do we see, or where do we envision the correction to happen in palm oil. And then finally, we'll leave some time towards the end for questions and answers. So if you have any questions, you'll see a tiny little box at the bottom of your screen which says Q&A. Please post your questions over there as and when you see fit. We'll try and address as many questions as possible. However, we'll focus on the questions which seem more and more relevant. So the relevance of the questions will also be determined by the number of votes a particular question gets. So if you see a question over there in the Q&A box, and if you like it and you want it to be addressed by us first, do make sure that you like it. As far as notes are concerned, I would recommend feel free to just sit back and listen in and absorb all the information and content that's coming your way, because we are going to be sharing a recording of this webinar as well as the presentation with everybody who's registered. Right. So with that, I'll now pass the mic to Rishabh. To Abhishek, please. Over to you, Abhishek.
Yeah. Thank you, Siddharth. I'll just start off with what's happening in the corn market. So as visible in front of you, the slide shows the price movement in the global corn prices in the recent few months. And you can see the prices have started going up starting in August of 2020. So for the next 8 months, it started continued to climb, and the price rise in the case of US was about 123% during the period that we are speaking. And also in case of Brazil, it was about 83%. The prices actually moved moved way beyond its long-term trading range. And as visible, the Fibonacci retracement does show you that it broke various levels of resistance, and the daily price fluctuations and movements remained well above the 50 days moving average line that is shown in blue color on your screen. So once that happened earlier this year, that is around May and June of 2021, the prices did take a downturn, and that was with the onset of the harvest season in many of the corn growing countries. With that, the daily price fluctuation started dripping below the 50 days moving average. Starting September, we have seen some sideways movement in the prices, where the market actually took time to gauge which side the fundamentals are actually moving. And following that, in the last few days, we again have prices moving above the 50 days moving average. So having seen the price trend, we will move ahead to talk about what are the factors that have impacted the prices. And in the next slide, we will tell you the particular supply side as well as the demand side factors that have impacted the prices during the period. So the supply side impact have had an big impact on the commodities prices, and it was also driven, what the supply levels were also driven by the fact how the weather panned out during the period. And like you can see, that the supply from Brazilian market took a very big decline, and about 16% year-on-year decline, which also led to about 50% of decline in the exports from that country. So Brazil, to put things in context, happens to be the second largest producer in the global corn market. Moving ahead to the next country, that is US, and US actually saw a drier weather condition, and there was a derecho windstorm that impacted Iowa. That happens to be the largest corn producing state in the US, and it accounts for about 19% of the total US corn produced. It was also followed by drought-like condition in the Midwest. That happens to be the corn belt of US, and overall it led to US not meeting the expected level of output growth during the year. It was also added by developments in other major corn producing countries, and that is Ukraine. And Ukraine also saw about a 16% of year-on-year decline in its output. So all in all, these developments on the supply side created a crunch in the global corn market, and the stock levels were depleting and it remained at a 6-year low. Moving on to the demand side, we had a very impressive demand from the feed sector, and the global feed demand remained high throughout the year. It was majorly driven by what was happening in China. China, after a successful containment of ASF, that is African swine flu, among its hog population, was able to increase the pig number of pigs that it went on to cultivate. So that actually increased the requirement for the feed demand in that particular country. It is followed by next factor on demand side, that is the ethanol consumption, which remained high with increased level of oil consumption throughout the year 2021. And ethanol constitutes about 41% of the total corn consumption in the US. So ethanol is produced from corn, and it accounts, like I've already stated, of 41% of the corn consumption. It went on to increase the demand for corn as well. In addition to this fundamental market developments, there were also some speculative activities on the trading platforms, which actually led to some bull run on in the corn market globally. That again added to the higher prices through the year. Then, in order to contain some of the some high level of prices, we have some policy developments from some countries, and first of them would be the decline in the corn share in feed formulation, which actually was substituted by relatively less expensive grains like wheat and rice. Then there was a crackdown on speculators by China, which also helped in containing the imports level from China. It was also followed by restriction on the level of export that came out of Argentina. And Argentina again happens to be the third largest corn exporter. And in order to contain the domestic prices, it tried to restrict the corn corn export as well. So in addition to that, the US-China first phase of the trade deal actually saw a huge surge in the Chinese corn imports. And to give you a number, it increased by about 290% year on year. And that also added to the export that went out of US. And the US exports increased by about 55% during the same period. So here, now that we have a story about how the prices, what are the factors that have impacted the prices in the history, we'll move ahead to our next slide, where we talk about our outlook on same factors or parameters that have been highlighted. We expect things either to change or continue on those front and have an impact on the global corn prices. To start off, I'll talk about the supply. And the production level is expected to increase on at a global level. It is expected to increase by about 7.7%, and the global corn stocks would be supported by an increase in all the major corn producing countries like the US, China, and Brazil. With a higher level of production during the year, we expect there to be a trend reversal in the level of stocks that are prevalent across globe in the corn market. And if you look at this graph on your right side of the screen, you do see an increase in the global corn stock levels, and the global corn stocks are expected to increase by about 3.4% year on year. And again, that is supported by increased level of stocks in US, Brazil, and China. Having stated what's happening here on the expected to happen here on the supply side, I move on to my next slide, where I talk about the demand aspect of the corn market. And here, like you can see, the expected level of consumption of corn is not expected to take any change in the course that it already is on. And the expected level of consumption is likely to increase next year as well. Global corn consumption is expected to increase by about 2.4%. And again, most of the major corn consuming countries go on to have an increased level of consumption coming from the feed sector as well. I move on to talk about the export. Export demand is also likely to increase 15% year on year in 22, and that would be backed by major increase in the Brazilian corn exports. And the Brazilian corn export, after having declined by 50% in 21, is expected to go up 145% year on year in 22. Then the last one of the major downstream, that is, I've already talked about the importance of the ethanol production, and the ethanol production in the US is also likely to increase following a 6.6% in year-on-year increase in 21. It is to be followed by a 3.5% increase in 22 as well. So this is our demand side development. I move on to talk about the weather in my next slide. And here, like you see, weather being one of the major driving factors on how things pan out on the supply side. And we have actually seen the importance of the same in this last year. So what we have here on this slide on your left side is the encircled corn producing belt of the US. And US being the largest corn producer across globe, next year is expected to see more number of days with better than average temperature, a normal temperature, which adds to or supports the yield increase or the production increase in that country. Then we have the expectation about La Nina, and La Nina actually impacts and brings drier weather condition in these belts, that is the Americas, both on the northern side and the southern side. Having said that, we actually have a high probability of La Nina setting in next year as well. But as of now, the weather developments are such that the first corn crop that comes out of Brazil is going, and the sowing of the same and the development is going well on track, and that is likely to have a positive impact, a supportive impact on the global corn supply moving ahead. So now that we have actually looked at various aspects of the fundamentals, the corn market fundamentals, I'll set in front of you the price projections that we have. And we have divided the same in the short-term price projection in our next slide. And then we go ahead to talk about the long-term price projection for corn. Yeah. So as you can see in the slide, and which I have already talked about, the prices have taken an uptrend of late. And that has majorly been because of what the reality of the day is. That is, the global corn stocks are at a lower level, and the demand at the same time remains to be strong. In addition to those factors, we also have an increasing and a very high level of input cost. And having said that, corn is one of the most fertilizer intensive crops that we have. And because of that, an increased level of input cost is likely to have an upward pressure, create an upward pressure on the global corn prices in the immediate period. And we project the prices to go up for the remaining of 2021 and the first quarter of 2022 as well. Moving ahead to this particular slide, where we have a long-term projection, and the fact that I have already stated that the production level and the global corn stocks are likely to improve, we might as well see a decline in the price projection from Q2 of 22 as well, Q2 of marketing year 2022. But the downtrend is not likely to be of big magnitude, and that is going to be because of the high level of demand that comes from the feed sector as well as the ethanol sector, and number for the same has been presented on the table on your right. So now that the directional aspect of the forecast has been stated, I have some risk factors that are associated with our projection. And those risk factors are likely to have impact on the price projection accuracy as well. And to name a few in my next slide, I have the rising agricultural input cost. And if that remains to be the case, that prices increase and continue to increase, we might have a case where the cultivators across the major corn producing countries go on to reduce the acreage that is expected for corn next year. And if that happens, it is an upward risk for the prices. Surging level of crude oil prices as well might see increased demand for ethanol for blending. And that again is something that would increase the demand for corn, and again, an upward risk for prices. Uncertain weather developments. So the developments or projections that we have on the weather front and how it actually pans out are two very different things. And if there are any unexpected, uncertain weather developments, that again is a risk on the upside for corn. An increased level of corn intake in the feed formulation. So like I've already stated in the historical context that earlier in 2021, what happened was that there was the substitution of demand from the feed sector away from corn to wheat and rice. So that could take a reversal of trend as well. And that is majorly because the wheat prices as of now stand at an 8-year high. One risk factor that we have on the downside is the drop in the levels of Chinese imports. And Chinese import was one of the major driver for prices in 2021. And moving ahead in 22, if that goes on to decline to by a big number, which is not expected as of now, that could again be another risk factor on the downside for corn prices. So with all these bases covered, it's time for me to summarize what has happened and what is expected to happen, and quote a number of what and where we see the prices for corn headed from here. And the multi-year high levels of corn prices that we have already seen did see a correction with the onset of the harvest season. And as of now, which I have already stated, because of the high level of demand and supply, has taken an uptrend again. Well, in next year, that is 2022, the average global corn prices would be expected to decline by 8 to 12% year on year compared to what it has been in 2021. So that brings me to the end of the section on corn. I will hand it over to Rishabh, who will take you through the palm oil market. Thank you.
Thanks, Abhishek.
Thanks, Abhishek, for the insights about the corn market. Now, moving to the second commodity in focus today, palm oil. So let's jump right into it. Palm oil prices have witnessed a consistent rise from May 2020 and have increased over 130% since then, arriving at a historic 10-year high levels. Palm oil prices broke its long-term trading channel in August 2020. As visible in the chart, prices have found a support on the 50-day moving average and have stayed consistently above the average, with a brief correction in June due to demand concerns. The Fibonacci retracement that we have plotted on the ICE palm oil futures also shows that the prices broke their technical resistance levels several times since the second half of 2020, leading to the historic highs that we now see. Now, the question which comes to our mind is, what led to such a sharp rise in prices? So Let's start with the supply and weather related factors first. It was primarily tight supply conditions for palm oil as well as other substitute veg oils, which led to the price rise. The Malaysian government prohibited the entry of foreign labor to contain the spread of COVID-19 in the country. Several plantation workers also left the country for their homes during this pandemic period. It is estimated that around 10% of the workforce left the country since the pandemic started. But since Malaysian palm plantations are largely dependent on foreign workers, this situation created acute labor shortages in Malaysia, which restricted the output. This, coupled with heavy rains due to La Nina, further hampered harvesting. Now, let me explain the La Nina phenomena that Abhishek also mentioned. La Nina leads to a higher than normal rainfall in Indonesia and Malaysia, which led to a disrupted harvesting in these countries and reduced supply. So basically, the effect of La Nina is the exact opposite in Indonesia and Malaysia than what Abhishek described it happens in the US and Latin America. Because of these factors, palm oil production in Malaysia fell 7.6% on a yearly basis during the marketing year 2020-21. Low production also dragged the palm oil stocks downwards. Stocks in Malaysia fell 26% and the global stocks dropped 9.8% during the marketing year 21. Adding to the supply crunch in palm oil market, adverse weather conditions also reduced substitute veg oil supply. Dryness in the US and Latin America adversely affected soybean oil supply due to La Nina. Now, as I explained earlier, while La Nina causes higher rainfalls in the palm oil producing regions of Indonesia and Malaysia, it creates drier than normal conditions in the important soybean regions of US and Brazil, which both account collectively for around 70% of the world's soybean production. In addition to this, drought-like conditions in Russia and Ukraine, which account for around 60% of the global sunflower oil production, reduced its supply as well. So overall, we had a low supply situation in the palm oil, as well as the substitutes, soybean and sunflower oil markets as well. Additionally, palm oil markets also witnessed high demand growth. Low veg oil stocks in India and China also led to a jump in palm oil exports. Further, high crude oil prices supported demand. Now, let me elaborate the connection between crude oil prices and palm oil. Countries like Indonesia and Malaysia subsidize blending of palm oil with crude oil. The resultant mixture, which is called biodiesel, generates less emissions. So when crude prices rise, it becomes more profitable for refiners to produce biodiesel, and thus the demand for palm oil also rises. Crude oil prices jumped around 33% year over year during the marketing year 21, which added to the rise in palm oil consumption. Now, during the same period, some policy changes also added to the bullish momentum in palm oil prices. Indonesia increased its biodiesel mandate from 20% to 30%, which means that the mandatory palm oil blending to crude oil jumped from 20 to 30%. Further, Malaysia exempted its 8% export tax on palm oil from June till December of 2020, which incentivized producers to export more in order to take advantage of this exemption. At the same time, India also reduced its palm oil import duty by around 10%, which added to the demand. Overall, palm oil consumption in the marketing year 21 increased 2% on a yearly basis. So that sums up the crunch in supply and rise in demand, which led to such a sharp rise in prices. Now we will explore the factors in detail, which are expected to affect price movement going forward in 2022. Starting with supply. Palm oil production is expected to rise 5% YOY in 2022, driven by a normalization in Malaysia's labor crunch. We discussed earlier about the acute labor shortages in Malaysia, which led to a decline in production during the marketing year 21. However, the Malaysian government has announced that they will allow the entry of 32,000 foreign workers, which is around 10% of the workforce employed by palm plantations in the year 2022. So that is expected to support production growth. As is visible on the left side of your screen, the production of palm oil is expected to rise. Additionally, we do expect substitute veg oils, soybean and sunflower oil supply to also rise. As visible on the right side of your screen, soybean oil and sunflower oil supply declined in 2021 due to unfavorable weather conditions. Dryness in the US and Latin America reduced soybean oil supply, while drought in Russia and Ukraine reduced sunflower oil supply. However, going forward, we expect improved weather conditions to have a positive impact on their supply, which could ease the tightness in the vegetable oils market. Now, moving to the weather outlook, there's a 90% chance of a La Nina occurrence, which may bring higher than normal rains in Indonesia and Malaysia, which is likely to support a yield growth and thus may aid in a production growth. On the left side of the screen, it's visible that La Nina may create drier conditions in the US and may actually reduce soybean supply. But we expect elevated demand to restrict the price fall. Consumption is likely to rise 2.9% on a yearly basis in 2022 as India, China, and the European Union, which are the top 3 importing regions, are likely to have low domestic stocks, which may increase their imports. Domestic prices are high in India, and the government has reduced its import duty for palm oil in July, September, and then a massive 67% cut in October as well. This is likely to boost imports. Power outages in China, as it plans to reduce emissions, have led to a decline in soybean crushing. Extended energy curves are likely to continue shifting demand towards palm oil. Further, a projected fall in rapeseed supply in Europe due to dry weather conditions will also increase demand for palm oil. Now, moving to the next slide, let's have a closer look at short term. Prices have consistently remained above the 50-day moving average since May 2020, with a brief correction in June, which happened due to lockdown in Malaysia that led to a decline in demand and a fall in soybean oil prices as there were some rains in the US, which led to expectations of better soybean crop. But prices are again moving above the 50-day average, as you can see in the technical chart that we have drawn on the left side of the screen. The technical chart also shows that the prices have made higher highs and lower lows. As visible from the Fibonacci that we have drawn in the palm oil futures, prices broke their resistance levels several times, and we are moving in the upward trend. We expect this to continue and project palm oil prices to remain elevated between $1,380 to $1,400 in the short term. Now, having looked at the technical point of view and combining it with our fundamental factors, we project prices to fall in 2022. As visible on your screen, after elevated prices in Q4 and Q1 of 2022, we can expect prices to go down because, as I explained earlier, Malaysia is planning to allow the entry of 32,000 foreign workers into the country next year. So that will have a positive impact on supply. Plus, La Nina may bring more rains, which may be beneficial for palm oil supply. And we do expect global palm oil supply to rise 5%. In addition to this, substitute soybean and sunflower oil supply is also expected to increase due to the improvement in weather conditions. However, prices are not forecast to fall to 2020 levels as demand from China, India, and the EU, along with the high crude oil prices, may cushion this price fall. We expect global demand to rise 2.1% on a yearly basis, and we expect crude oil prices to jump around 29%. That is going to cushion the price fall. But there are some risk factors as well, which may affect our price outlook. Starting with the bullish factors, The labor situation in Malaysia continues to be a risk factor. If labor shortage continues longer than expected, then it will increase the risk of a further upward movement in prices. Secondly, if weather in the US turns out to be drier than anticipated, then it may reduce soybean crop output and push the prices of palm oil higher as well. In case of higher than expected demand from India and China, which are the major importers, due to their low domestic stocks, then it may push prices upwards. Similarly, if Brent crude oil prices jump, then as I explained earlier, this may incentivize more biodiesel producer and higher demand for palm oil, which will likely cause prices to move in a bullish momentum. After the positives, let us know the bearish factor which may exert downward pressure on our price projection. Higher than expected rainfall in Indonesia and Malaysia, which are the main palm oil producing regions, may raise palm oil output from these countries and exert a downward pressure on prices. To conclude, palm oil prices have seen a sharp uptrend due to supply disruptions, high exports, and weather-related uncertainties. However, prices are now due for a downward correction in 2022 from the unprecedented high levels that we have seen in 21 due to a likely rise in global vegetable oil supply. That's all from my end. Please feel free to ask me or Abhishek any questions that you might have.
Perfect. Thanks, Rishabh. Thanks, Abhishek. Lovely presentation. A lot of insights and a lot of content over there. I hope all the listeners got a chance to absorb all of that. I do have a few questions here, so let me just quickly read them out. So we'll start with first question that we have. Were the prices that were shown, are these forecast spot prices, and how do they differ from the forward curves?
So yes, the price projection that we are doing and the numbers that we have projected, those are the spot prices that we expect for the next year. And the chart that we used for the price trend that we look when we are looking at the historical prices, those were the forward price movements, forward curve price movement that we referred to.
Okay.
Yeah.
Right. Let me just. Cool. Right. We have another question. I think this one's for you, Abhishek. What's the reason behind the convergence in US and Brazil corn prices? I think in the chart there was a bit of convergence. Probably that was there. Do you have a reason behind it?
Okay. So the convergence probably we're talking about towards the end of the forecast period, that is towards the Q4 of 2022. And that is again a seasonal aspect associated with it, that the prices for the Brazilian corn are expected to decline during that period, given the fact that it only comes out of the harvest period. And on the contrary, for the US, the prices are expected to go up because of the higher level of demand that is prevalent during that period, and it from the export market for US.
Okay, perfect. Thanks for that. Right. Again, I think this question is again for you, Abhishek. How's the La Nina situation panning out at the moment, and how is it likely to impact the production in Brazil next year? I'm assuming that's for corn.
Okay. Yeah. So La Nina actually has an adverse impact on the standing crop development. And in case of Brazil, what happens is that there are two crops per year. First is the crop one and then crop two. Crop one is majorly accounting for 20% of the production, and that gets sown as of now. And what happened last year was that there was a delay because of the La Nina weather condition in the sowing and development of the first crop. And that actually led to a delay or missing of the so-called ideal window of sowing for the second crop in earlier marketing year 2021. But that is not the case right now, and the progress of the first corn crop is pretty well, going on right on track. And So that what that is expected to do is to provide that ideal window of sowing for the second crop, and second crop accounts for about 65 to 70% of the total Brazilian output, and it also majorly caters to the export market. So that is the change in the production expectation that we had last year, and what is going to be in the future from now.
Okay, perfect. Right, so we've got more questions coming in, which is great. Also in the chat box. So I'll first finish the Q&A section, then I'll go into the chat box as well. The next question: EU will reduce palm oil import for biodiesel production starting by 2022. What's the driver of demand increase in 2022 for palm oil from EU? Rishabh, that's for you.
Yeah, so EU will reduce palm oil imports for biodiesel, but because the rapeseed oil supply is tight, the rapeseed production in the EU is expected to fall around 5% in 2022. So we do expect some substitution to happen there. So rather than biodiesel, the demand would be driven by the edible sector, the food sector.
Okay, great. Right. How do you see the dollar strength, and how will this impact palm oil? So in other words, basically, what impact would the USD have on palm oil prices? Are they linked in any way? Is that one of the cost drivers?
So the USD is expected to appreciate as the Federal Reserve is likely to increase rates going forward. Inflation is also high, and prices in USD would definitely be affected. However, at the same time, the Malaysian currency depreciation will increase its imports. So the exports. So we do expect palm oil exports to increase.
Right. So higher USD meaning higher demand, higher exports, basically. Great. Okay. Perfect. Right. So the next question is, you called out first fertilizer challenges as risk in corn. Do you expect similar implications of risk for veg oils as well?
So yes, Sid, particularly for soybean oil, because the fertilizer prices have increased so much, and there is a lot of supply chain issues coming out of China. There is going to be a substitution in favor of soybean rather than corn. So we do expect that soybean supply would increase, and soybean oil supplies should also subsequently increase, which we have already factored.
Okay, perfect. Everybody who's listening in, if you feel your question's not been answered properly, please feel free to sort of just let us know in the chat box. Right. I think there's a question over here about the labor situation improving in Malaysia. So I think Rishabh, you'd already countered that. So we can.
Yes.
What you're envisioning is basically close to about 32,000 odd, laborers
Right.
coming in. Perfect. So we can let go of that one. Right. What do you think is the impact of demand destruction due to the high prices and impact of high energy prices on oilseed crushing?
So
yeah,
I would see this primarily from the supply side. The prices have increased quite a lot. However, the supply of the entire vegetable oil complex remains tight in this moment. Palm oil supply is decreasing because of the labor shortages in Malaysia. Soybean supply has remained crunch because of dry weather conditions in the US and Latin America. Rapeseed oil supply has fallen because of severe drought-like conditions in Canada and the Europe. So overall, there is a lot of supply crunch happening. So I would say that despite high prices, the consumption for veg oils has remained high.
Okay, great. I'm going to move on quickly to the chat box because there are a couple of questions coming in from there as well. I think, Rishabh, this one's for you. So the outlook and trends, are they also applicable for palm kernel oil and CNO?
So there are some factors, underlying fundamentals, such as the rise in production due to the entry of foreign labor in Malaysia. That is definitely going to impact PQ production as well. We do expect PQ production to rise next year. However, I wouldn't say that we can completely superimpose what we have learned in palm oil to palm kernel oil as well. There's been a recent tropical storm, Kompasu, in the Philippines, because of which the coconut prices jumped more than 27%. And the PQ prices also followed suit by rising 30% in a single month. So in terms of the underlying fundamentals, we do expect production to rise for PQ as well. But otherwise, we can't really say that the trend would be replicated in the PQ market.
Okay, okay, perfect. Right. Another question. Is poor crop expected for corn in the US also expected for soy, and therefore going to affect biodiesel production in North America? Therefore, further pressure on glycerin availability and cost.
So far, the soybean planting is going strong. Why? Because in the previous year, the soybean prices have increased quite a lot. And because of that, the farmers now have the incentive to sow more soybean crop. Therefore, we do expect soybean crop to increase, the output to increase next year. However, as Abhishek touched upon, and I also explained that La Nina would create drier conditions. So we may see a drop in yield and a drop in output, but we still expect that on a yearly level, the crop would be higher.
Okay.
And for the second part, the biodiesel production, I would say that it's not dependent just on the crop output. It depends a lot on policy as well. Since 2021, the biodiesel production in North America has remained robust because there was an expectation in the market that President Joe Biden would focus more on clean and green energy. And biodiesel ultimately produces less emissions. However, because the prices have increased so much and there is an ongoing supply tightness, the American government has backed down from their initial commitment. Some refiners also set a petition in the Supreme Court, and the Supreme Court ruled in their favor that such high amount of biodiesel production is actually not required. So I would say it would depend largely upon the policy direction that the government takes.
Perfect. I think you've kind of answered another question also in some way, but I'll put it forward nonetheless. So we've seen some news in the US related to actions to bring down our oil and gas prices. Do you think this would affect palm?
Yes, it's so similar to what I just explained, that it depends a lot on the policy direction.
Okay, perfect, perfect. Right. Do you see Malaysian palm oil exports increasing in 2022 versus 21? And if yes, by how much? How do you compare it to 2021?
So yes, there is demand from India. There's demand from China. And we do expect around 8 to 9% rise in Malaysian palm oil exports next year because of that.
Okay, great. Right, coming back to the Q&A section then, is wheat and other grains also subject to same drivers and trends? Also, do you have any deep dive on feed market and trend, as several grains get into the formula and could also be subject to feed market drivers and constraints? Abhishek, would you have a view on that?
Yeah. So yeah, thank you, Sid. I would like to answer that.
Yeah.
So yes, to an extent, I would say the overall grain market does get impacted by similar kind of factors. But as far as the specifics are concerned, more of corn goes into the feed demand, and that caters to that market. And on the contrary, for wheat, we have majorly the human consumption aspect of it, which is more of a driver. But the additional or the side factor is also the the feed industry. So yes, to an extent, the feed market does feed into or is a driver for wheat, as far as just like it is for corn. But that's not the only driver. It also has the other consumption downstreams as well.
Okay, perfect. Right. A few more questions. Everybody who's listening in, if you have any last minute questions, please feel free to drop them right away. We'll try and answer as many as possible. I think we still have about 10 minutes on our hands. If Brent crude oil exceeds $100 per barrel, what impact do you see on palm oil?
So it should have a positive impact on palm oil prices. As I explained earlier, the relationship between palm oil prices, biodiesel, and crude oil. But a lot depends on policy changes as well. Biodiesel mandates in Malaysia and Indonesia will play a big role, as they have in the past as well. Statistically speaking, 1 unit change in Brent crude oil prices explain around 40% of the movement in palm oil prices. But I would like to emphasize again that the output would depend on the policy changes. Prices of Brent have increased in the recent months as well. However, because of the relaxed mandates by Indonesia and Malaysia, we have not seen that much going into the biodiesel sector. However, because of import demand from India and China, the prices have still risen.
Okay, perfect. Right. I think this is a little more generic, but again, Rishabh, for you only to answer. Is the push for sustainable sourcing impacting palm oil demand in any way, or is it more overarching?
So far we haven't seen a lot of impact, even though the European Union has focused on sustainable sourcing. India and China, which are very important importers, have continued to import due to domestic needs. However, in case of policy shifts by India and China and the swift implementation of these policies, we might see a drop in demand, but that remains uncertain as of now.
Okay, perfect. And right, we have a follow-up question basically on a previous question that was asked on the correlation between high energy prices and oilseed crushing. So could you, Rishabh, just sort of elaborate a little bit more on that front, basically? So China has already seen an impact, and this will further impact oil and meal availability. So what are your views again, if you could just sort of elaborate a little bit more on high energy prices and oilseed crushing?
So the high energy prices are not the sole driver of commodity markets, right? Fundamental factors such as the supply and non-fundamental factors like the financial investment, the monetary policy, and the currency play a part in exaggerating basically the price impact. So we can't say that this energy crisis is going to be the direct driver of it. Energy prices have already peaked. Coal has started to decline already. We have seen coal going down in the Chinese market, in the global market as well. So with that, we do expect that the effect would have to normalize eventually going forward. I hope that answers it, but please feel free to ask if you want more on this.
If we can definitely take it offline as well.
Yes.
So perfect. I think, we have another question. Is due to the prevailing shipping container shortages, trucking shortages, high ocean freight rates, and such supply constraints. I mean, either of you can take
yes, I would like to answer that.
Sure.
I mean, yes, what we have tried to do here is to get details on what is happening on the fundamentals of each of these particular grades, and apart from that, what are the other drivers that have impacted the prices, and the factors that we identified as major factors were taken into account here, and those were both from the demand side, supply side, as well as the additional factors as well. But yes, having said that, these are also some of the factors that the container shortages or the logistical issue that prevails across globe, that has been an overarching aspect, and it has impacted the prices across commodity, and that's not very specific only for the grains. And that is something that has had an impact on commodities pertaining in, from the other baskets as well.
I agree with Abhishek that the issue of container shortages, trucking shortages, high freight rates, this has more of an impact in general on commodities and not limited to just corn and palm. There were other factors as well, which led to such a sharp rise in prices, as both Abhishek and I have explained. But this definitely added to the price rise.
Perfect. Right. I think that's it. With that, we'll close. Thank you everybody for joining, for listening patiently, and for all your questions. If there are any questions that you feel were still unanswered, we'll be more than happy to sort of take them up offline. And thank you, Abhishek and Rishabh, for an excellent presentation and for all the hard work that you've put in. Before everybody logs off, just wanted to remind everybody that the Smart Cube has a very strong and robust offering in the commodity intelligence space, where we not just cover agri commodities, but we also work on chemicals, petrochemicals, energy side of things, resins, dairy, and so on and so forth. So if at all you're interested, or you know somebody in your organization who's interested to talk to us, please feel free to reach out. Like I've already said, we will be sharing the recording as well as the content with everybody who registered for the webinar, and look forward to seeing some of you, if not all, on the next series. Thank you. All right. Bye.
Thank you, everyone.
Thank you.